All right, welcome to the latest accounting video. A bit less action-packed than the previous one, but today we're looking at mistakes. Now, I want you to think, wow, I would never make a mistake in accounting. And that's true, but you can make a mistake by not liking, sharing, and subscribing to these videos and sharing them with other people that do accounting from other schools, because resources. But anyway, you wouldn't make a mistake in accounting, would you? You wouldn't accidentally put the wrong transaction in the wrong spot. You wouldn't incorrectly record one expense as another or record a sale as a purchase. You wouldn't do that. No one is that silly. And I get that. I can see why you would make that assumption. Unfortunately, we all make mistakes. Some are bigger than others. Some of them we can fix. And in this case, in accounting, we can fix them. So that is going to be a fair portion of what we're doing today. But we're also going to investigate our last source document. So if we look at the source documents we've done receipts, checks, invoices, and credit notes. We've done those four, but we have not done the memo. So the memo records extra additional information we may want to know as an account so that we can appropriately deal with it. Whether that is, hey, we write down more, or we need to make a correction. Or maybe it's informing us that the owner is going to contribute something or withdraw something. Or we're setting up a double entry accounting system. We're going to be looking at all of those today. So let's look at our first three uses of the memo. So the transactions for today will be October the 1st. The owner contributes a vehicle worth $5,000. That is memo 1. Then on the 11th of October, the owner withdraws inventory worth $4,000, and that's memo 2. And then lastly, on the 21st of October, the wages that were recorded as $440 was actually deemed incorrect and should have been listed as insurance plus GST. And this is memo 3. So we're going to look at memo 1 and 2 first, and we're going to unpack memo 3 a lot more. So memo 1. So let's tick over here just so we can show you how the general journal, general ledgers will look. Alright, so memo 1, you can see here in the general journal, we've got the 1st of October, vehicle goes up because the owner's given that to the business worth $5,000, and capital, because it's increasing the owner's share, goes up, is a credit also by $5,000. And then you have your narration there. Owner contributed a vehicle worth $5,000, memo 1. That's what you need to put. Then on the 11th, the owner withdraws inventory worth $4,000, and that is memo 2. Very simple there. Drawings, which as we know is a negative owner's equity, so it's a reverse, it's like an expense, but not an expense. Same classifications, where if it goes up, it's a debit, and inventory going down, which is an asset, is a credit. And we can see owner withdrew $4,000 worth of inventory, and that drawings reduces the owner's share in the business. But how do we deal with transaction 3, October 21st, where the wages, so we recorded $440 as wages, but it should have been listed or recorded as insurance plus GST, and this is memo 3. So there's 2 steps here. At the moment, our wage account will be sitting as a debit of $440. We need to reverse that first so that wages equals 0, or that transaction's undone. So you want to credit wages 440. And now we've got this 440 we need to divide or split out to insurance. Quite simply, we've got 440 including insurance. We need to get the insurance amount by itself. So 440 divided by 1.1, because we've got to get GST out, is 400. So that insurance expense is 400. Insurance being an expense is debit, because it goes up, is 400. And the remainder, GST, which is now where it should have gone, because we're paying GST, that is also a debit of $40, because 10% of 400 is 40. And that's how we balance that, okay? We could refund it to bank and redo it, but you're writing bank twice, and that's really inefficient. So this is the nice, simple way. The easiest bit of advice I can give you is to sound it out. As we said with the general journal, where the vehicle goes up, so that's a debit. Meanwhile, capital, the owner's share goes up, is a credit. Likewise for drawings and inventory. Drawings decrease in the owner's share in the business, very much making owner's equity go down. That is a debit. Inventory going down, it being an asset, obviously, is a credit. We can see right there, 21st of October in the credit side on wages, insurance / GST clearing, 440, while insurance, GST clearing, both have debits of wages for 400 for insurance, 40 for GST. Left equals right. So that's a nice, simple way to correct errors. There's no big way to do it. I think, honestly, you just need to practice. That's all I can really suggest. Please practice these transactions. Please do all the examples from the textbook. Now, we've done 3 ways to do our memos, but there is a 4th. And it's very interesting. I love this. It is establishing a double entry system. So here's our transaction, and that's a long one. So on November the 1st, Bob has provided the following information to you and requested you set up a double entry accounting system for him. And that is Memo 1. This is always Memo 1. It's always the first memo in the new system. And we've got our list of transactions there. Bank 4,000 debit, that means it's an asset. Accounts payable 5,600, inventory 11,000, accounts receivable 20,000, loan 50,000, vehicle 40,000, shelving 10,000, and GST clearing 11,400 credit. Before we do anything in the general journal, I'm actually going to split up on one side debits, on the other side credits, and they appear as so. And we can see automatically this is not balanced. Like, that is really obvious at this point. So we need to make it balanced, and that is because our capital account is missing. So we're going to total up the debits, and then we're going to deduct it from the credits. And if the math is correct, the capital should come out to 18,000, and that way debits will equal credits. And if my math is further correct, it should be debits 75,000 and the credits also 75,000. And then we look at the general ledger, and I'm just going to bring up bank and GST because one's debit, one's a credit, and we can see here it's 1 November, the new amount, and then balance 4,000. And it's always balanced as the first opening transaction of a double entry system. So that's how we set up a double entry accounting system. And obviously we narrate at the end. Now, if we have a look here, you can see we've got our source documents, list of transactions, and other is going to be memos. Other is other information that does not fit in the above transactions. So my suggestion to you, and there's no magic bullet or way to make this easier, you just need to practice. I know that's not what you want to hear, but practice will make perfect. So firstly, practice with reversing entries. practice setting up a new system, practice drawings, non-cash capital contributions. And now to set up accounts, I think the first step, and it will make everything easier, is to divide your assets and your liabilities side, or your owners' equity side if you need to calculate liabilities, and work out what is missing. If you can't figure out what's missing, it's probably capital, so calculate that capital. That's just normally what comes up. So on that note, please stay safe, please like, please subscribe, please share with people. These videos are fun to make. And on that note, I will see you next time. Later.